Everyone, it's Imran from Options Insight. This is a quick message to let you know we've got our Options Trading Bootcamp happening this weekend, 29th and 30th of April. If you're worried about the potential recession, this is the time you want to learn how to weatherproof your portfolio. Okay, who knows where the bottom is in this thing? 3,800 on the S&P, 3,200 on the S&P. There's multiple targets out there. In this bootcamp, I teach you how to hedge your portfolio. I teach you multiple techniques, whether it's long vol, short skew. These are things you need to know how to navigate market swings. So come and check us out at our website, optionsinsight.com. This is an opportunity you don't want to miss. Looking at the vol side of things, we've got our dashboard up here. So crypto realized vol recovering this week. Now, you don't often see crypto realized vol going up when the market goes down. We certainly haven't seen that anytime this year. So that's the first time this year that we've seen a reasonable move down in spot that's taken realized vol with it. Okay. So BTC 10-day realized back up in the 40s, Ethereum back in the 50s. Implied vols were not as convinced. So you can see here that implied vols continuing to just kind of flatline to slightly drift lower, whereas the realized, the yellow line popped higher. Okay. So you're seeing that convergence there. So basically the market is, I'd say, because implieds aren't moving up very much, it's basically saying options traders don't really think we're suddenly going to start moving around. Okay, so looking at our vol dashboard, what do we see? Crypto realized vol recovering on the week, and that was with spot moving down, which we haven't seen all year. Typically, we've seen all the realized vol coming to the upside, getting people excited, people chasing optionality to try and get leverage to that move. This time around, we saw a significant drop and we saw realized vol pop. So you can see here the yellow line moving up in both Ethereum and Bitcoin. Implied vol did not buy into the story. You can see it's rolling over still, not rolling over like dramatically, but down about 5 vol points a piece in the two assets. Whereas, Bitcoin realized was up back in the 40s, Ethereum was back in the 50s. So that's basically option traders saying that they don't think that there's going to be a major move now. We just think we're back in the range. The breakout failed. We've got no reason to anticipate or expect a lot of volatility going forward. Okay, so that's kind of what the implied vol is saying, in the fact that it hasn't risen alongside realized. Now, the recent spike in realized vol, especially in Ethereum, volatility carry has kind of dropped, right? So you can see volatility carry here very close to zero, actually went negative briefly in Ethereum, whereas we do still have some positive carry, but not huge, about 5 vols in Bitcoin. So I wouldn't be in a rush to earn theta this week. We've got GDP numbers, we've got PCE inflation data as well, and dealers appear to be a bit short gamma in Bitcoin as well. So it's unlikely to breed stability this week. You kind of want to feel confident that dealers are a bit long, market's behaving itself. There's a decent variance risk premium between implied and realized to really feel like you want to sell vol. To me, right here, right now, that's really not the setup we've got. FOMC on the 3rd of May as well is the next major catalyst, macro catalyst. That could drive a big dollar move potentially, and then that would likely filter through to crypto markets as well. So there is a catalyst there as well. Choppiness within this 25 to 29K range is probably what appears to be the most likely scenario. So I think fading moves once you get to either end of the range could make sense. But sitting right in the middle of the range right now is anyone's guess which way we're going to go. So for now, I would be in a wait and see sort of mode. Okay, that's what we're seeing in realized vol. Moving on to term structure. So both term structures drifting lower. We're seeing a bit more steepening in Bitcoin as that front end not realizing quite as much, whereas the curve in Ethereum is actually slightly flatter than it was. So whilst it's shifting down, the front end is not shifting down so much. It's more the middle that's coming down. Okay, and that's because Ethereum realized has been better by a good 10 vol points. You can see here, 10-day realized spread is at around 10. That's the dotted yellow line. In terms of the vol spread, ETH Bitcoin, you can see that green line is inverted more, right? So that front end weekly has actually gone higher, and that's been supported by the realized spread at 10 vols. So that's trading at around 8 vols. But if we look at the back end is slightly shy of 5 vols still. Okay, so the back end not really catching a bid in that vol spread. It's really being driven by the front end as Ethereum slowly starting to move again and show what it can do. If we look at the actual Ethereum Bitcoin spot spread, that's retraced about 50% of that violent rally that we had post the Shanghai upgrade. So whilst, technically we're sitting on a support level, but that support level looks fairly weak in ETH BTC. So we're not convinced that that's going to hold. So we're not piling into any kind of bullish trades on Ethereum particularly yet. But again, wait and see for us right now. Overall, we do think the vol spread looks like it may have turned a corner. So remember here, this vol spread got very, very low, even went briefly negative. It has now bounced and is trending back higher. Ethereum has shown an ability to move more than Bitcoin in both directions, on the way up and on the way down, which we haven't seen all year until recently. So now that Ethereum is back to moving, let's see if it can sustain that and go back to its old ways, where implied vol can trade in that sort of 10 to 15 above Bitcoin vol, right? That's what we're ultimately looking for Ethereum to sort of mean revert back to. Okay, then SKEW. As markets rolled over, obviously it became clear that it was a false break to the upside. The front end SKEW went first. I was on CoinDesk talking about that last week, where we were saying the front end is saying that the near-term risk is that we go lower, but longer-term people are still bullish the space, which is why longer-term SKEW was holding for calls. Now, once it became clear that the bounce wasn't going to come, the rest of the curve has moved down as well to catch up. So now we're seeing put premium pretty much across the curve, except for the absolute back end in Bitcoin. But Ethereum has actually got put premium everywhere, right? So Ethereum has been very fast to react and has dragged the whole curve back into put premium. Now, it was like that before. Ethereum put premium was more persistent than Bitcoin. Remember, Bitcoin was the one that started to rally hardest before Ethereum did. So the market's just saying, if Ethereum has got the higher beta and is going back to its old high beta ways, then it would make sense for there to be a bit of a downside tail bid to Ethereum, because if the whole crypto space does start breaking down, then Ethereum's the one that could really get a bit of a beating on the way down. So that's why that SKEW is starting to reflect that and go bid across the whole curve for Ethereum. And then lastly, longer dated SKEW is still slightly for calls in Bitcoin. And we think that's likely due to some expectation that the halving, which is due next year, may catalyze a rally later this year or early next year. So there will still be interest to have some sort of upside exposure for that halving, because everyone's so used to those cycles and how it tends to be a bullish catalyst for Bitcoin, right? And just fundamentally and structurally, you're taking so much supply of Bitcoin out of the game every time there's a halving. It does make sense for prices, right? Okay, dashboards, what they're saying, we're in buy calls territory because we've shifted back down towards the lower end of the Bollingers, but we're not rushing out to buy calls right now, just because we think there's room to get closer to 25K, the bottom end of that range. And then same story on Ethereum. It's also saying buy calls, but we are right now, we're sitting on our hands. If we then look at flows, what have the market participants been doing? Volumes were relatively average last week. Market weakness did obviously trigger some put protection buying. So we can see a bunch of yellow here on the downside. That's basically puts being bought between around the 28K to 24K area. But people are just buying super short dated protection, right? They don't want to lock themselves into longer dated protection. They just say, well, if this thing keeps crashing, it can crash fast. And we're just going to use the super short dated stuff to get leverage to that move down. So no one really bothered about buying anything longer dated on the downside. On the upside, a few things going on. We had short dated call selling around the 30K strike. That was kind of a funding leg for the put protection that was being bought in general. We saw some May 30 calls rolled into June 33 calls. That was a decent sized clip. We saw some June 30K calls rolled up into the 34 calls in a 1/2 ratio for zero cost. And that was basically someone who put those on as a vol trade, was rolling up to a higher strike to get more vega and more convexity in that vol trade, basically, right? And then lastly, in terms of directional, we did see outright call buying in out from May all the way out to December. We had some clips of May 35s, September 60s, and December 60 calls as well. So those are the main clips that we saw. Moving on to Ethereum flow. Bit more mixed. We did see puts and stuff, but not so much of the put protection flying in as we saw in Bitcoin. We saw a big trade go up in June put ratios, selling of the 1900 strike to buy 2 of the 1500. So that's this big block of purple here, selling that strike to buy that strike there. We saw upside calls being sold initially before the move, whereas the move was starting to happen in this area, sort of 2200 and above in May and April. Remember, there was a lot of call buying that had gone on where people were trying to play the break to the upside. And once it failed, some people said, okay, give me some premium back, whatever I can get my hands on. And then once we've had the sell-off back down here to 1800, we have seen call buying activity come back in that 2000 strike. There's a big clip of those May calls went up in the last couple of days as people are thinking, okay, maybe time to play a bounce again. All right, so those are the flows that we saw. In terms of positioning in the market, dealer positioning, so it seems like the positioning is moving in opposite directions, right? So in terms of Bitcoin, dealer gamma definitely flipping more negative. So we saw the line down here as we sold off. And the big strike that we're left with right now is this one here, which is the April 28K strike, which the street seems to be pretty short, right? So if the street is short this option till Friday expiry, then this may well be providing short gamma to the market and making things more choppy than they otherwise would be. So that seems to be the setup right now in Bitcoin. And then Ethereum positioning is much more neutral, close to flat again. Again, as we move down away from all those calls that were bought, here you see the street is short the upside, but is long the kind of local strike around 1800. And that is basically giving us the stability and keeping the gamma right flat, closer to flat. But obviously, if markets rally, you're going to get closer to the short strikes. Dealers are going to get short again. And if markets sell off, then it's these long strikes that's going to be providing the most of those Greeks. So then the stability of the gamma positioning will be intact. And so it's a strange one, because what this positioning says to me is that the risk of Ethereum selling off materially is less than Bitcoin. But if you look at the skew is steeper in Ethereum than it is in Bitcoin, right? The positioning seems to contradict the pricing of the skew, right? Because there's not a material difference, right? As in, I would have thought the put premium should be sitting with Bitcoin based on that positioning, but it tells you what the market's thinking. Okay, moving on. What do we got left? My crypto strategy. We're in the wait and see mode, waiting for more conviction. We want to protect our capital more than just take random gambles for no apparent reason. Okay, that's the message. I'll catch you all next week. Thanks.